If you got a high income, you probably have high taxes, right? It's a common problem. In this explainer, we are going to unlock some of the advanced financial engineering strategies that are used to legally slash those tax bills and build lasting wealth. We're going way beyond the typical advice you always hear. So here's the game plan. We'll start with the main challenge that high earners face. Then we'll dive into some really powerful strategies, like becoming a real estate professional. We'll also look at which tax shelters are kind of overrated versus the ones that are seriously underrated. And to wrap it all up, we'll talk about how to defend your wealth from big picture economic policies. You know, the reality for high earners is that it can feel like the more you make, the more the tax system just takes. The real game isn't just about earning more money. It's about building a fortress around what you've already earned to stop it from getting chipped away by taxes year after year. Okay, so just imagine this. Legally wiping out over $150,000 from your taxable income. I mean, think about that. That's the kind of power we're talking about with the strategy we're about to break down. And this isn't just about investing in real estate. It's about turning that investment into a precision tool for cutting your tax bill. All right, let's get into the core strategy. See, there are very specific provisions in the tax code that are actually designed to reward people who are active real estate investors. It's not just about buying a property, it's about playing the game the way the government wants you to play it and then reaping those rewards. Okay, this is where it gets really interesting. Think of your income as sitting in two different buckets. You've got your active income, that's from your job, and your passive income from investments like real estate. Normally, you can't mix those two for tax purposes, but real estate professional status, or reps, well, that's like a special key. It unlocks a door between those buckets, letting you use losses from your real estate to directly lower the income from your main job. Now, as experts are very quick to point out, getting rep status isn't exactly a walk in the park. The IRS has 3 really strict tests you have to pass, and believe me, they will want to see proof. This isn't some secret loophole, it's a professional designation, and it requires a serious, well-documented commitment. And here is the major strategic advantage. This whole setup creates a powerful divide and conquer opportunity for couples. One spouse can stay focused on their high-income career, while the other dedicates their time to managing the real estate portfolio. When they file their taxes jointly, they become a single tax-slashing machine for the household. This slide shows the magic of this strategy perfectly. The real key here is depreciation. That's a non-cash expense that reflects the wear and tear on your property. This creates something called a paper loss, which can be much bigger than your actual cash flow. And that's the loss you get to use to slash the taxes on your main business income. Pretty incredible, right? Okay, now before we get into the really exotic strategies, we've got to address some common traps. A lot of people think they're being clever with certain deductions, but they're actually leaving money on the table or even putting themselves at risk. So let's make sure your foundation is rock solid. Let's talk about the home office deduction. The simplified method is simple for a reason, and it's not always a good one. It often leaves a ton of money on the table. As you can see, the regular method takes more work, sure, but it can easily give you a deduction that's 2, 3, even 4 times bigger. We're talking about the difference between a few $100s and a few thousand. This one is huge. The government offers some pretty generous tax breaks for business vehicles, but they want to be absolutely sure you're actually using it for business. If you can't prove that at least half your driving is for business, those really aggressive deductions, they just vanish. And the IRS definitely looks closely at this, so you have to keep detailed records. All right, so now that we've made sure our foundation is solid, let's explore some more advanced tools. These are 3 seriously underrated strategies that take you beyond the standard deductions and into the world of structured, tax-advantaged investments. So check these out. 3 powerful but often overlooked tax shelters. With oil and gas, you can immediately deduct the intangible drilling costs. Things like labor and supplies. With Bitcoin mining, you can use something called bonus depreciation to write off 100% of your equipment costs in the very first year. And a cash balance plan, that's like a 401k on steroids. It lets you defer a huge amount of income, which is a total game changer for people in their peak earning years. And this is a really big deal right now. The government has brought back 100% bonus depreciation, and that's the engine that makes strategies like Bitcoin mining so incredibly powerful. It literally means you can buy all the equipment you need and deduct the entire cost from your taxes in year 1. It's a massive upfront tax benefit. So far, we've been really focused on tax strategy. Now, let's zoom out to the bigger picture, protecting your wealth from the major shifts in the economy. Because it's not just about what you can control, it's also about defending against what you can't. Let's look at a real-world example. When the government decides to impose new tariffs, it sets off a chain reaction. Suddenly, the cost of imported goods goes up, so companies pass those costs on to you, the consumer. And when prices rise across the board, well, that's inflation. And as you can see from the data here, the effect isn't some sudden explosion. It's more of a slow, steady burn. Inflation is just creeping up month by month, and that steady upward trend is what can quietly but surely erode the value of your savings over time. So how do you fight back? Well, experts tend to agree that the best defense is to own assets that hold their value or even increase in value during inflationary times. We're talking about hard assets like real estate and gold, and also broad market investments that tend to rise with the overall economy. This slide really nails the core idea. You should think of these assets as an insurance policy against inflation. As the value of your cash goes down, the value of these assets tends to go up. You're essentially hedging your bets, and that's how you make sure your overall purchasing power is protected. So the big question is this: is your portfolio designed to work with the tax code and the economy, or is it a victim of them? As we've seen, true financial success isn't just about making money. It's about proactively engineering a defense to protect everything you've earned. It's about taking control, not just accepting whatever comes your way.